join us.
All right. Can you hear me now? How's that?
I can't, your video's off.
Let's see if we can get that fixed.
I can hear you though.
All right.
There we go. How you doing this morning?
Hey, good. How's everybody? Sorry about the delay. It is bright and early here on the West Coast.
Hey, no worries, no worries. I understand. I've done that before with meetings, so it's definitely understandable. So we'll get you started right off the bat. You got everything you need. I know we kind of, threw you in the loop there. And I'll go ahead and give you the introduction and let you get rolling. Is that good?
That sounds good.
Okay. All right. So Damion Lupo with Total Control Financial. He is president of Total Control Financial and lead architect of the EQRP, the Ferrari of 401ks. The EQRP is a unique and powerful system to put individuals in command of their own investments, tapping into the $25 trillion locked away in Wall Street controlled retirement programs. He is the best-selling author of 9 books on personal finance, investment, and retirement planning, and the host of the Transformational National Podcast. And Damion is going to be talking with us today about the deadly SDIRA real estate investor tax and how to avoid it. So Damion, I'm going to let you give yourself a little bit further introduction and go ahead and tell us what you have.
I think that was a great introduction. Do you want me to share I appreciate that. Thanks for having me and for everybody being here. Do you want me to share the screen then?
Yes, and you see the share button there down in the center, the green button. Just share your screen. I'll let you take it, and I'll mute myself and let you run with it when you're ready. You just tell me, and I'll hop off, give you all the spotlight.
All right, I think we're ready to go. I'll go ahead and share it.
All right, excellent.
Okay. Let me know if we can see everything. All right, can we see it now?
Yes. Yep. Looks good.
Good deal. All right, guys. So I am Damion Lupo, and as you just heard, I set up a Total Control Financial a number of years ago to really share a tool, and it was because I found something that was unique in the code, and really a tool that basically gave an opportunity for my mission to fulfill, which is 1 million people, 1 million financial shackles broken, and in order to do that, we needed to have some kind of a profound tool. The tool that I came up with was the QRP, and the QRP is a term that stands for Qualified Retirement Plan. It's something that's been around for a long time, and many of you guys probably know Tom Wheelwright, because Tom Wheelwright's a Rich Dad advisor, and he gives me crap for calling the QRP book the QRP book, because QRP just stands for a broad term for all the retirement plans. But really what we're doing is we're narrowing in on something that you can use it for. And so in a way that we've designed it with the EQRP, and that's because we need to do something about this guy. This is the IRS, and the problem with the IRS is that they're going to take 70% of your money over your lifetime if you don't have a better plan than to just go along and work and give it away. So with the EQRP, it gives you a chance to think differently about how you're going to invest and operate. And basically, by thinking differently, we're going to invest differently. And investing differently requires some different tools and some different ideas. So that's where the EQRP came up. It basically was a new way of investing. And I'm going to get into some of the nuance around why it's so valuable and why it's so different than some of the other things that many of you have heard about and may be using with your investments right now. Just to give you broad strokes on what it is, it's an enhanced qualified retirement plan. And so effectively it's an IRA on steroids. It's the Ferrari of 401ks. And it's the biggest question people have is, why haven't I heard of this? It seems like I should have heard of this. And it's because the Wall Street system has tons of fees and custodians have tons of fees, and both of those systems control your money. So it's basically Leonardo DiCaprio's fault. So just so that you know, some of the big benefits of this is that you actually do have checkbook control. And this is different than a self-directed IRA where there's still a custodian. You truly have all the investment options that are out there, and you don't have transaction fees. Custodians with IRAs, you're going to have transaction fees. You're going to have custody fees. There's going to be wire fees. There's just like all these fees, and you eliminate those fees for operating your EQRP. when you want to invest in real estate and syndications and multifamily, and it's fast. I mean, this is pretty amazing that how fast it is. You've got the ability to write a check, and by the way, David, we are definitely going to talk about UBIT. Sorry. So if you have something that you want to invest in, you find out about it this morning, like, somebody wakes you up at 6 o'clock in the morning and they say, hey, I got a deal. You decide at 9 you want to do it. At noon, you're in the deal. That's how fast this is. There's not 3 weeks of delays with custodians. There's a built-in $50,000 credit line with any type of qualified plan under the 401 section, including the EQRP. So that means if you decide you want to go buy a car, you don't need to see if you get financing or you're eligible. You literally could borrow $50,000 out of your plan and go buy the car, be the bank yourself. Now, this is different than a lot of the insurance products that are out there that are talked about in terms of infinite banking, bank on yourself, all that stuff. This is a different thing. It's just a benefit inside your plan. So a cool thing that is useful if you've ever had a credit line cut off or you just need money and you see this pile in your retirement account, it's available. And you can use debt, and that's the biggest factor. And we're gonna get into UBIT and why this is so important and how deadly this is if you use an IRA. So if you're using an IRA for real estate and there's debt, you've got UBIT tax that's coming. And we're gonna show and talk about why that's so dangerous. Bottom line is you can have huge returns with an EQRP and have lots of debt and there's no consequences, which is epic. All right, so big differences here. We kind of went over these between self-directed IRAs. That's really the big reason why this is so valuable, because the EQRP is so much more important, more valuable, more powerful than a self-directed IRA. And the things you can do with it are really pretty endless. Syndications are the biggest thing that people are using it for now. Getting involved in deals that are bigger with other people. People are using it for flips. I know we have clients that are using it for coffee and cacao farms in Belize and Panama. And I mean, you can do anything basically all over the world. Private lending is an option. If you want to be the bank, that's one of the things that I like to use it for, where I'm just loaning my money out. It's better to be the bank when you're actually getting payments versus making payments to Visa. So if you have an opportunity to do hard money lending where you're basically the bank, you can do that here. You can buy physical gold and silver, and you can actually take control of the physical gold and silver, meaning you can hold it, and because you're the trustee, you get to control it. That's different with an IRA. You're not allowed to do that. You have to have somebody else holding it. So if you like your stuff in your hands, if you want to be in charge of it, this is a great way to eliminate any counterparty risk. And so counterparty risk is where another party is basically part of the equation of your risk. If somebody else could do something that could impact your return or your asset being damaged or lost, that's counterparty risk. And there is no counterparty risk when you physically hold gold. The other thing here that's not on here, but has become, there's a renewed interest, is Bitcoin and crypto. Those are eligible to put inside of a plan, and it's fairly straightforward if you've got an EQRP investing, and it can become a pretty big deal if there's a Roth. Every EQRP has a Roth, which is after-tax money. It also means that your assets are growing tax-free, and you get to take the money out tax-free. So with crypto, there's many of you have seen the returns that have been epic over the last, say, decade, since it was launched almost a decade ago. That those massive returns are going to cause huge tax problems for people unless they're using some type of tax shelter and vehicle like an EQRP. So this is a great place to look into using it for that type of asset if that's something of interest to you. This is really the number that we're wanting to get to. Our idea is that we get to zero, meaning zero tax, and we're going to do that through the EQRP so that you can actually keep that 70%, the 70% that the IRS is going to take, because I think it's a better number to just keep all of your money. I'll give you an example, and this is where UBIT comes into play with using debt and investing. So if a self-directed IRA, and we're going to use Roth so we can compare these things a self-directed IRA that somebody has and they invest in real estate with debt, UDFI, which is unrelated debt financed income, is triggered. And what that means is basically a third of the profit is going to go away, a third of the profit that's proportional to the debt. So just so you understand what that means, If you have a $100,000 property and there's 70% debt, like 70% loan on it, $70,000 loan, and that property, and you put in 30,000, and then it doubled in value from 100 to 200, then 70% of your profit would be subject to this tax, because, and that's the UBIT tax. That means that you're going to lose about $30,000. That's a big problem. Great news is with an EQRP, it's exempt, and so you get to keep all that profit. There's no UDFI, and that means zero tax. This is a huge deal, and it's just sitting right in the code. You can see the bottom, the Internal Revenue Code section 514C9. You can look at that piece, and you can see it says 401 trusts are exempt from that from UBIT for leverage. This is just a game changer. I mean, it's what savvy investors are using right now to invest. And I'm gonna go over some options if you're already in a deal, if you're already in a real estate transaction where you're a passive investor with an IRA and you're going, oh crap, I'm gonna be hit by UBIT tax. I'm gonna show you how you can fix that. Here's an example of a hypothetical example of a syndication, an eightplex. We've got $1 million for the eightplex. We have 3 investors that each put up $100,000, and they each got a quarter of the deal. So, and then the person that put the deal together gets a quarter as well. $700,000 in non-recourse debt. Syndicator gets 25% ownership, as I mentioned. And then the property, let's say it sells for $2 million. So if we have any of that investment money in a self-directed IRA, it's a ticking time bomb. With an EQRP, there's no bomb. It's just you're in control, and there's certainty, and there's not going to be any tax. But here's what it actually looks like. When that thing sells for $2 million, there's $1 million in profit. $700,000 is taxed at 35%, maybe even 37%, because it was 70% leverage, 70% was debt. So 700,000 of that $1 million in profit is taxed if this is all self-directed IRA money. So the UDFI tax is $245,000. That's literally just really pissed away to the government. It doesn't need to happen. If that investment was from each of the investors had instead used an EQRP, they would keep all $1 million. So that's just a really clean example of what happens because the UBIT monster that's chewing up a lot of these profits. And this is the difference, 263,000 versus 325,000 if you had put your money into this deal. So your 100 goes to 263 or 325. I mean, that's really a pretty straightforward, kind of sad situation if you're using a self-directed IRA. $62,000. That's literally the difference between using the wrong vehicle versus the right vehicle. And then I mentioned gold. You can hold it and take possession of it because you're the trustee. You get, it's private. I mean, literally, there's no other private. There's no more private place than you holding it and deciding where it goes. And there's even options for syndicating gold. So if that's an interest, reach out and I'll dig into that as an option. And then again, mentioning Bitcoin and crypto, this is a huge thing that's shifting our money system. Facebook just released their white paper, and they're going after. They're basically going to use Libra. That's their intention, and they've got 2 billion users. They're going to be using Libra as their cryptocurrency, and that's changing the game. That's one of the main reasons I think that Bitcoin has launched and surged over the last number of months and has been going a little crazy. So the credit line that I mentioned, in an EQRP, and many of you have seen this with 401ks that you may have had at work, you've got the ability to borrow. With an EQRP, it's a little different because you're in control of the plan. So if you've got, say, $100,000 in there, then you can borrow up to $50,000 or half of it, whichever's less. So if you had $40,000 in your plan, you could borrow $20,000. You basically get to write yourself a check, and you're funded. So it's pretty amazing. You can use it for just about anything: education, coaching, mentoring, financing a car. Almost anything, well, basically anything. There are no limits on what you can use it for. So it's a really cool tool that's built in. All right, so who is qualified for an EQRP? And it's almost anybody because it's really for a business owner. So if you think about what a business is, it's anything that has the potential to make money. I mean, a lemonade stand is a business. I mean, that's pretty straightforward. And you can look at the IRS code and it says for business owners, and it doesn't say you have to have a Fortune 500 company. So if you're a syndicator, if you're putting deals together, you're qualified. If you're self-employed, if you've got Schedule C income, if you're an investor and you're doing property management, if you're, really, your grandmother is truly eligible. Grandma could be hired. She could do some photography work. Oh, here's one of the things that's a pretty big deal. Your kids, if you have kids right now, they could potentially use this tool. And one of the things that happened in the tax code was that the tax brackets changed. So if you've got a kid, you could pay your kid $12,000 a year, up to $12,000, and it's not taxable for the kid. You get a $12,000 deduction if you've paid for somebody to do work as an expense to your business. What that means is that you've removed $12,000 out of your taxable income, and it's now in your child's hands. You're still controlling it. It's in your child's hands, and you could use that for their expenses. And one of the expenses could be contributions into an EQRP, potentially a Roth EQRP. So they could put really post-tax money that's never been taxed into a plan, and then that could grow over their lifetime. It could also be grown up to when they're 18, they go to college. You can pull all those contributions back out, tax-free, penalty-free, all the basis, all those $12,000 contributions. To me, this is a better strategy than a 529 plan because it's growing and you've got options to pull it out. That's a brilliant strategy that is awesome, and anybody can do that with kids. You just have to find a way for your kids to be employable. This could be taking out the trash. This could be running errands. If they're really young, it could be like when I was 5, I was a model for, it was either Sears or JCPenney in their catalog, and you paid quite a bit of money as a model. So that's an opportunity for you if you have kids or you know somebody with kids. David, the question you had is, can I roll over my self-directed IRA into an SDIRA? I'm not sure what an SDIRA, but an EQRP. So a self-directed IRA, any IRA, there's 2 things you can't move over: an inherited IRA or a Roth IRA. Any other plan, any other self-directed IRA or IRA can be moved into an EQRP. So if you want to have control, if you want to do something with it with real estate, this is definitely something you're going to want to do. A few things that you can't do: you can't put property that you already own into an EQRP. So if you own a fourplex or a rental or something, you can't just put it into an EQRP. And you can't have property that you're going to use. So sometimes people think that they'd like to buy a lake house or a vacation property and they're going to go use it. It's not allowed. It can't be a current benefit. But you could go and buy a property that you were going to use in your retirement, and then when you turn 59 and a half, you could distribute it to yourself, which is very cool. So if you have your eye on something and you go, yeah, I'd like to actually spend some time there, hey, buy it. Use it as an investment right now, and then actually use it yourself when you're 59 and a half. Ben asked, do I have to directly manage the property to be eligible, or can I qualify even if I'm just managing the manager? You're generally going to want to have other people managing things, meaning that you're not going to treat something as an active business. So the suggestion would be that you always make sure that you do that. It'll actually allow you to do more investing. You can be an asset manager. That's really the way you should look at this. With any retirement money, it's meant to be a passive investment platform. So you're going to want to have other people managing. And that's, as a guy that had 150 houses, I know what it's like to manage a bunch of, it's like, they're like individual businesses. It's chaos. You want to have somebody else managing the day-to-day anyway. And that's what makes it eligible, because then it turns into a passive investment. And then David's follow-up question, can I roll over my self-directed IRA into an SDIRA that has an LLC? Do I have to close my current LLC? Okay, so a lot of times people have LLCs inside of a self-directed IRA. I think, David, that's what you're saying. An LLC inside of a self-directed IRA can be rolled over. That LLC can be rolled over into an EQRP, so that it's because it's an asset owned by the IRA, and then you roll the LLC, that asset, into an EQRP. So yes, you can definitely do that, and it's what people are doing that already have investments and they want to make it clean. You can keep the same bank accounts. We just adjust your operating agreement and attach it to the qualified plan. So definitely doable, and it's done frequently. All right, next thing we've got here is, already talked about this, future land and potentially a home. So I like that strategy, especially if you're buying something with the Roth. So Roth, again, is the after-tax money. So if you buy a piece of property, some land or a house or whatever with your Roth EQRP, you turn 59 and a half, you literally distribute it to yourself, no tax, no penalty, nothing. Hey, go move into the thing, you're good. That's epic. All right. So how do you get money into the EQRP? So I kind of alluded to this. Any IRA other than a Roth IRA or an inherited IRA, any 401k from an old employer, thrift savings plan, which is like a government 401k, 403bs, 457s, all of those can be rolled over. Sometimes you can even roll money over that you've already, that's at a current employer. Not very common. It's called an in-service rollover. Most of them don't want to have you pulling your money out of their plan. But I've seen it probably happens about 1 every 10 times. It's an option, and just wanted to let you know that you could potentially do it. And if you want help with that, you want to investigate, you can reach out to us. Let's see, question. Jason invested in a hotel project using notes through self-directed IRA. I was told I would have to pay UBIT. Is this better? So UBIT applies to 2 different things. One, it's for anything that has debt if it's an IRA, and the other one is active trade businesses. So the hotel project, it depends on what stage it's at. If it's an active business, UBIT is probably going to apply to everything everywhere. If it's just it's a passive investment in the real estate, it's possible that the EQRP would be exempt from it, and this would be a reason to investigate, because most certainly you're going to have a problem in that hotel project with an IRA for sure. So this may be a way to fix that. And then the self-directed IRA advisors that are out there generally do not do this, because this is something that would take away fees from them. So you're going to, IRA companies don't generally want to do this. If they do something, they do something called a solo 401k, and that's a generic trust. Most of them are going to not want to talk about this type of deal because it's going to take all those fees. The average fee for a custodian that they're shooting for is between $2,000 and $4,000 a year, and for an account, and that's about 10 times more than you're going to pay on an annual basis with an EQRP. So huge difference. You're probably not going to have the EQRP is not anything that anybody else sets up, because it's a trademark process that's internal. You have other knockoffs that are out there that could help, but they are not the same thing, and nobody else does the EQRP. Just that does come up, and a lot of people try to be copycats. Okay, back to funding the EQRP. The contributions, you can put up to $62,000 a year if you're over age 50. If you're younger than that, it's $56,000. You can do it deferred, or you can do it that Roth money. So it could be pre-tax, after-tax, totally up to you. And this is based, if you're doing new contributions, it's based on your self-employment income or income that's not W-2 from a job that you already have. Okay, so you can definitely have a job, have a W-2, but that money is not going to be money you're going to put into this. And question from Ruben, when syndicating, does there have to be a degree of separation for families, such as my wife using an EQRP on a deal I'm raising money for? So husband and wife are disqualified parties, so you can't use a plan from one person with another person's deal or investing with them if they control it. So there are some nuances around making sure that you're not working with disqualified people, and there are ways to do it. So we have people that are working, that have spouses working together on projects. One person has a plan, and one person has a project, and they're able to invest. You just have to do it correctly. And that's why you need an expert that's not going to lead you off into the wild. And we can definitely help with that if that's something you want to talk about. Okay, so brass tacks, here's the deal. The EQRP versus the self-directed IRA, you can put 10 times as much money into it. No reason to use an IRA when you can only put $6,000 into it. It's now $56,000 if you're under age 50. And that's just a big difference. Think about it over 20 years. I mean, it's $1 million. $1 million in contributions versus 100,000. I mean, 20 years from now, you're going to just be old. You're not going to be rich. And it's just a better strategy to have a lot more money in there. You've got 10 times the control. There's no custodian. And back to the very beginning, there's no UBIT from real estate leverage from the UDFI. So unrelated debt financed income, that leverage trigger that triggers UBIT, it doesn't exist. I mean, it's literally exempt. That is it's a game changer. So the Roth, this is my favorite part. And so when Tom Wheelwright and I talk about the value of a retirement plan, Tom says, I hate these things, really, except unless you're using the Roth. And I tend to agree. I think the Roth is where you want to go. And this is a strategy question, but really there's a reason that Mitt Romney, the senator now from Utah, there's a reason he's got $100 million in his Roth account, because he's a smart guy. And the Roth means you're not going to pay taxes down the road, because we've got a tax system right now that is likely to get more expensive. It's going to be where we're going to have higher rates down the road. So the idea that you're going to wake up one day, be retired, and have a lower tax bracket is a stupid, poor thinking idea. The reality is you want to be a lot wealthier. You want to have a lot more income when you're quote unquote retired. And if you do that, you don't want to be in the highest tax bracket, because I don't think we're going to be in tax brackets in the 30s. We're probably going to be in the 50s, 60s, 70s. Shoot, in the 1950s, we had the progressively highest tax bracket was like 90%. I think we're likely to head in that direction versus lower. So Roth is amazing, and it's also something that can be inherited. So like I set one up for my dad many years ago and inherited a Roth account. When I inherited it, I get to spend it, I get to grow it the rest of my life. This is something you can do for your kids, or if you have parents or grandparents, amazing opportunity to do some legacy planning, to where you can take a lot of this taxable asset base and income out of the system by setting up a Roth account, and then it's inherited and it gets to grow tax-free and be spent tax-free for decades. So I would recommend digging into this, and I'm going to give you a chance to get a copy of my EQRP book if you want a copy of that, and unpack it and really understand how you can use this for your family. A couple of questions that just came up. Let's take a look here. Do traditional financial planners generally know this strategy? Why hasn't this become more mainstream? So financial advisors are set up on something called AUM. AUM is assets under management. Every financial advisor that is building a book of business they're basically getting a bunch of people, and they're saying, I'm going to have all these people's money, and then I'm going to charge them 1% or 2% or whatever it is. And so that's their model to create a portfolio so that they get paid forever, and it's called passive income to them. They don't want to generally say, yeah, go run your own money, because they would go broke. They're not going to tell you what's going to starve them to death. So financial advisors do know this strategy. The strategy has been around since 1974 when ERISA was put in place. 401ks have been around since 1978. This is not new, but they're not going to generally promote it. What I typically see from financial advisors is they'll say, oh, this is one of those places where you're going to have control. And basically what they're saying is you're too stupid to run your own money. And so they might suggest or allow you, if you will, to have like 5 or 10% of your money to use for your own crazy investments, like things that are not Wall Street. That's typically what I see. Some enlightened advisors that get real estate, which is very few because most of them are classically trained on Wall Street type of products, they'll say, yeah, this makes sense. And so they'll be in support of it. They're not going to set them up. That's not what they do, but they generally would know of it. They just aren't going to promote it because it's not in their self-interest. And unfortunately, too many financial advisors are thinking about themselves, and they're thinking about their bottom line before their clients, even though they pretend the other. So I'm not a big fan of a big part of that industry. There are some great advisors that I've worked with, and there are tons out there. There's just far too many that are not aware of the whole market. They're just aware of what they've been told to sell. So let's see. So really the next step is booking a strategy. And this is a wrong slide here, so we're going to kind of ignore this. But what I'm going to tell you is that if you want to get a summary of this, you can text the word EQRP to 72,000, and that will give you a copy of the summation of what the EQRP is. And also, if you want to copy the book, QRPbook.com. So if you want an e-copy, just text the word EQRP to 72,000. And if you want a physical book, go to QRPbook.com and you can get a copy. We'll send it out to you. It's on me. It'll empower you to learn more. And you can even get a copy for your financial advisor if you want to really make them crazy. So I'm happy to answer some more questions if you guys have any more questions. And then we'll see if there's anything else that I can do for you guys. One thing that has come up, there is some legislation in Congress right now that is potentially going to change some of the rules. And really it was the insurance companies wanting to sell annuities. So it's kind of a big giveaway for the insurance companies. Doesn't change a whole lot. It might raise the minimum age, the RMD, required minimum distributions, to 72. That's happening right now. Ted Cruz is holding it back because he wants to have some 529 changes in it, which are the education accounts. So some of that's happening. If you want to get on our list and you opt into either the book or the ebook, you're going to get updates on those things. So if you've got IRAs or you've got a qualified plan, you do want to know about these things because they will impact you. There are changes that are happening. This is probably the biggest change that we've seen in the last 10 years. So Richard, sorry, thanks for the question. 72,000, 72000. That's the number you send that message to, and just send the word EQRP, and it'll allow you to get the downloadable report. It'll actually go right to your phone, so you can. And I'll type that in here. So send EQRP to 72,000. So that's kind of what I have here for you guys. I hope that's helpful. And again, bottom line is with retirement plans, if you're using an IRA for any type of real estate with leverage, I guess I didn't really get into this, but this is probably the most important thing. If you're stuck, if you've got a deal and you've already invested in it, you can convert that. You can move the asset from the IRA into an EQRP, and you're now exempt from that tax. So you're not stuck. This is a huge thing. This is where people go, oh my gosh, I need this now. Because if you sell that thing, or if the syndicator, if you're in a deal and an asset gets sold, you're going to have a taxable event. There's no way around it. You're going to have a taxable event. So this is something that can help you, whether or not you've already invested or whether you want to invest. This tool is what you want to use for any leveraged real estate. Period. No questions, no exceptions. It's really just, it's the thing to use. And Ben says you're buying a $1 million eightplex, want to use 200,000 from personal checking and 100,000 from an EQRP. Can't mix funds if you're in control of your deal. So the way you think about this, if you wanted to use personal funds and retirement funds to buy Amazon stock, no problem, because you don't actually control Amazon and you're not a majority owner. But there's two ways to disqualify. One, if you control a deal, if you're one of the controlling, like a managing partner, or two, if you have too much ownership. And so you can get around that by having somebody else run it and by not being a majority owner. So just something to think about. Again, this is a good opportunity for you guys to reach out, and we can talk about your deals, and I can tell you how to structure them correctly and literally how to not get blown off, get your knees blown off by UBIT. Ruben, and anybody that would like to share this with your investors, your clients, anybody, text EQRP to 72,000, get that report, and then you can share it. It's a PDF. You can share it with them. You can also, if you reach out to me at totalcontrolfinancial.com, reach out or find me on LinkedIn. I'll send you books. We have material that you guys can share, because really most people aren't going to know about this, and you can just use it to empower them. And are banks aware of and accepting this form of retirement account? Banks set up checking accounts for this. Most don't want to, and it's because they can't make money off of it. So if you have an EQRP and you want to set up an account, that doesn't do them any good. What they want to do is set up an IRA and fill it full of CDs. So typically banks are going to be a big pain in the butt. I mean, they're there to make money. They're not. It's not to make you money. It's not to help you. It's to make their shareholders money. And so you have to just keep that in mind. We have a number of banks that are super helpful and and we'll introduce you to those folks, and you can reach out to those. We share those with our clients because they're awesome. So if that's something you want to learn about, reach out to me and we'll get you those contacts. Sorry, Richard, your question was, will banks loan on a property held in an EQRP? Again, the answer is yes, but not most. And it's because it has to be non-recourse debt. What that means is if you buy a property using your EQRP and then you want to get some debt, you can't personally guarantee the debt. And that's normal for most properties until you get into very big properties. But we do have contacts with banks that will do non-recourse debt on investments, which is a game changer. If you can get a bank, because they're charging like 6%, which is much better. When I loan money out as a hard money lender, private money lender, I'm loaning it out from 9 to 12. So if you can shave off 50% of that with the bank, that's pretty epic. And again, we would be happy to introduce our contacts to you if you want to reach out to us. And let's see if we have anything else. Let's see, any other questions? Let's see if we have anything else here. Brandon, any other questions on your side you want to?
Yeah, if you want, can you hit the stop share button down at the bottom? That way it'll take, there you go. Now we can see each other. No, that's always very interesting. I have 4 girls, and so, we actually just inherited some 529 plans from some in-laws. And so if I have a 529 plan and it sounds like an EQRP is a better way to fund education, can you roll over 529 plans, or is that not an option?
So 529 plans, you can't roll over. So they're really kind of, they are a siloed pile of money that are just really restricted to one thing. The nice thing about the EQRP, especially, and we're talking about the Roth EQRP, is that you can just pull out the money that you're saving in there. And it's not that you're going to grow that money for education, but you're going to have a lot of options. And it's an overall strategy to get money in there. And quite honestly, when you're thinking about college, you want to have lots of options for kids these days, because if they're stuck with, you got to go to this college or you got to go to college, maybe they want to do something, what if they want to be a plumber? Like, you're kind of stuck. Mm-hmm. So I think it's great to give them options and have a tool that doesn't limit them. And I think nowadays you can't be limited. If you're limited, you're probably stuck because things are changing too fast.
Sure. So the best option there would be to use the 529 on maybe, private grade school, and then start something else for college or further education, something more flexible.
I think that's a good idea. We'll see what Ted Cruz does with the changes. I mean, there's chatter about using that for private education, things with special needs. I mean, there's a lot of things that are changing right now. Again, this is something that we are going to continue to share with our folks, our clients, and people that are on our list, because this is all we think about. And it's something that you don't want to have to spend all your time digging through the congressional registrar to try to figure out what's happening. We'll just share it with you.
Yeah, that's excellent information. And so this is something too, like if, let's say you had a business and you want to do some tax deferring, you could allot money, income from a business to your children if they're of an age where they can receive income, and you can have that income go into, so they're on a lower tax bracket already, and then they're able to contribute to an EQRP under their name that you have control of, and then you can fund that or use that however you want. So it's much more flexible. Is that correct?
Yeah. So you're basically employing the kids, and there's no age limit. So, I mean, when I was 5, I was working as a model for JCPenney, Sears, whatever it was. And so you think about it, there's really no limit. You don't have to be 16 to work it's not like working in a restaurant or something. If you've got kids, they're employable at any age. It's a question of what you're doing. And then that money can be a deduction for you and goes to them tax-free. That's a great strategy. Even if you don't use an EQRP, just to pay your kids, because your kids have expenses. Kids cost a lot of money. So if you can put $12,000 into a checking account that you're paying them for, well, guess who's in charge of the checking account to spend money that you were going to spend anyway? $12,000, the average person, that's $2,000 to $3,000 in taxes. Use that one strategy, and I mean, this entire program, you just made 10 times what it cost you to be in this program that Dan set up. I mean, holy crap, that's an epic return with one idea. So, I mean, I like the idea.
Yeah, exactly. Yeah, I'm always looking for strategies with 4 girls, and I'm calculating my expenses daily. So, but yeah. Great information on the EQRP. I remember last year, or I mean, not last year, in January when you presented too. It's great information. You have to be smart with these strategies, and using the tax code to your benefit, because it's really, it's the government's way of directing capital in the economy, and so it's smart not to use what they've set up. So thank you for sharing. Thank you for sharing the link, the text code. That was 72,000. Text EQRP to 72,000, and then your book. Plug your book one more time for everybody so they can go ahead and get that. Is that on Amazon?
Yeah, the book's on Amazon. You guys are here, so if you want to go to qrpbook.com, I'll send you a free copy. It's on me, and so you don't even have to go to Amazon. I mean, I appreciate the $2.45 that Amazon pays whenever somebody buys one. I mean, thank you very much, but I'm happy to support you. I don't want to create any type of barrier between you and the information. So if you want to go to QRP Book and just fill out that really simple form, I'll mail you a copy of it, and then you're off to the races. You can do what you like.
Excellent. Well, let me just check the questions here. It looks like you got most of them. Great questions from everybody this morning. And make sure you follow up with Damion and get with him on the EQRP strategy. Sounds like a great strategy. Thank you for jumping on. Sorry about the miscommunication on the time zone thing. I know how that works, but thank you for being able to jump up quickly and get online. So we appreciate that.
I'm happy to do it, you guys. I think it's a good lesson because right now it's about adaptability and it's about new information. And if you can't adapt, if you're not willing to listen to new things, unfortunately, most people are not here. Most people are doing their normal day to day, and so the results from yesterday are going to be the results tomorrow. You guys being here and investing your time, it's not the money that you're investing that's most important. It's the time, and it's what's going to change your life. So I commend you for being here and investing this time. And I appreciate you being here too. So first thing in the morning, I get to see that there's people that actually care about their lives, because the government is not going to save you. You are going to save yourself, and you're going to create a life by doing the things that most people will never take the time or energy to actually learn about. So congratulations to everybody for being here. And I appreciate you guys being here, and thanks for having me.
Yeah, and I just want to touch base before we go about something you mentioned about financial planners and them, the mindset of you being too stupid to know how to direct your own money. And being on a summit like this and learning and actually paying attention to yourself proves that our attendees have what it takes to invest on their own. Because I was just having a conversation yesterday about as someone who is looking to invest a family member, and they were looking at money markets that were paying 2.7%, just because that's what their financial planner told them to do. And I said, well, you're losing at least half a point of your money because inflation's higher than that. But to them, they're just like, oh, I'm making 2.3%, and it's low risk, right? And but it's getting them to think outside the box. And I would say if you could just have a financial planner, these people, it has to come from, I won't say any particular financial institutions, but it has to come from their financial planner, or it's not safe, and it's just, listen, make informative decisions, be your own judge of what's a good investment, and do your own study. And we have great content here today. You'll learn a lot about investing. And thanks again, Damion, for joining us, and hope you have a good rest of the day.
All right. Thanks everybody for having me. You guys have a great time and learn lots.
All right. So next up we have, let me just